Okay. So the cross-company sales, when a client has got multiple companies or multiple company codes, and these company codes have got their individual identities, they have got their own setup like sales organization, distribution channels, plans, and a situation arise when a plant assigned to one sales organization or one company code does not have the material which the customer is requesting, but the same material is available in a different company code in a different plant, right? So for that scenario, the sale is effective through something called cross-company sales or intercompany sales. If you look at this slide, customer 2500 will place the orders on sales organization 2200, which is assigned to company code 2200. That is the first step. Now once the order is placed, the delivery is happening from plant 1200 to customer 2500. If you look at the arrow right on the top, right? But the plant 1200 is not assigned to the sales organization 2200. It is in a different company code. Okay. So step number 2 is plant 1200 delivered to customer 2500. And then if you look at step 3, sales organization 2200 is issuing an invoice to the customer 2500. Okay. Now the revenue is coming from customer to the sales organization, and there is something called transfer pricing. If you look at 4 and 5, sales org 1000 is also issuing invoices to sales org 2200. Right. The pricing that we are charging to the customers may be different from the prices that we are paying to our sales organization 1000. So the price from 4 to 5 is called transfer pricing, and it is in most of the circumstances less than what we charge the customers. Okay. So our task is to configure this kind of scenario that when we create a sales order, we enter the document type, we enter the sales area, and at item level, instead of the plant which is defaulted, we will change the plant manually to the plant which holds the stock. Or for this case, plant 1200, so we will change it manually in the sales order item level. Okay. The system will generate invoice, and we will create another invoice of IV type. That will be the intercompany invoice. Okay. First process step is create sales order from this customer to our sales organization. Now this is how the assignment will take place. The first circle is for company code 1000 and the second circle is for company 2200. Company 1000 has got a sales organization 1000 and it has got 4 plants, 1000, 1100, 1200 and 1300 assigned to it. Right. Company code 2200 has got one sales organization 2200 and plant 2200. Right. And we want the sales for 2200 to pick stock from plant 1200 and sell it. So we have to make this assignment somewhere. Now the price for intercompany billing, the sales order says example of 788, item 10, material M01, quantity 1 piece, net value $2,000 US. Let's resume. TR00 is the pricing condition type in the customer pricing procedure. That is $2,000, that is charged to the customer. And then the next one, TI01, that is the condition type for intercompany billing. This will only populate in the intercompany invoice when the sales organization of one company code is issuing invoice to the sales organization of the other company. So for this case, one will be acting as a supplier or a vendor and the other will be customers for this transaction. Okay. So the price charge $1,700 for PI01. That is most of the time cost plus some transportation charges or some transit charges. And the profit margin is $500 for this case. The second step, client 1,200 will deliver the items to customer 2,500 based on its own arrangements like shipping points and transportation and route determination. So these are the steps for shipping process. In case it is warehouse relevant, we create transfer order, otherwise in the delivery document directly we say go and pick the items. And packing is also optional. If we have to pack the material based on the pre-configured packaging materials, we can create, and then we can print, deliver, and note for precision. So these are just for academic interest. That after the client delivers the order, these are the process steps to be followed for shipping. Okay. So once we get the confirmation that the goods have been delivered from client 1,200 to customer 2,500, sales organization 2,200 will issue bills. That will be the standard process. So for example, we have got a sales order type 0R1, will create delivery of GRS type, and this is an invoice of GF2 type. This is pretty standard so far. Invoice to end customer, that will be of type F2, so we can customize it to GF2. Partner role pair and order item pair 2,500. Order header sales org 2,200. Sales org 2,200. Distribution channel 10 division 0. Right, so this is all that we will see on the invoice to the customer. Now this is the intercompany invoice, which is issued by sales organization 1,000 to sales organization 2,200. Now in this case, which sales org is acting as a customer and which is acting as a vendor? Correct. So we'll have to map sales org 2,200 to some customer code in the system. We'll have to create an internal customer in the normal way that we create, like in VD01. And then once you have done that, we'll assign that customer code to the sales organization. And then we'll continue as a normal business. Like this is a customer and this customer is buying stuff from sales organization 1,000. Now intercompany billing. 9000573. This is an invoice of type IV. Pair is 22,000. Company code 1,000. Sales org 1,000. And distribution channel 12 and division 00. So if you look at the pair 22,000, this is the customer master record created for sales organization who is buying it. Okay. So the customer master record for pair 22,000, that is a customer of IV type. Company 1,000. This is how we will create this customer master record. Okay. Now for the intercompany billing, TR00 will be inactive. IV01 or TI01, that the condition that is created for $1,500 US, that will be generated, and VPRS, that is the condition type coming from the material masters, which represents the cost of that material. Now there is a difference between VPRS and IV01 of $200. So that is the profit margin the other sales organization is making by this trade. Okay. So the sales org 2,200, which is selling this stuff to the customer, is making $700 USD, and the sales org 1,000 which is selling to 2200, is also making 200 USD from this transaction. So we can assign a different pricing procedure for the invoice of type IV based on this criteria. In this pricing procedure, we can have a condition type PR00 for price that will be inactive, but we want this condition type to appear for our calculations, and then we'll have IV01 and VPRS. So once sales of 1000 has issued the invoice to 2200, our transaction is complete. Right. We can post the invoice receipt and we can clear the payment. Now this is the checklist for customizing. We'll go through all these steps one by one. First we have to assign sales area for the intercompany billing to supplying plant. Then we'll maintain the assignment between sales org, distribution channel and supplying plant. Then we'll assign the customers to the sales organization. And then we'll maintain the billing type for intercompany billing and the sales document type itself. Okay. Questions? Okay, let's try to create this scenario first. I'll run the scenario for you and then we'll look at the configuration. So we are going to create a sales order of type VOR1 for source apartment 00201. Let's say the company test 3. This material is not INC. This material is not maintained by purchasing. So I just material trade records. Okay. So by default, this material has been created for plant GP01, which has been assigned to our sales org, sales area and company code. So here at line item level, we will change this assignment to GP03 we have to create a view for ZP03 also in the metal master. Selected purchasing, and for ZP03. Alright, that should be it. Yeah, ZP03 is the plant in the other company code. Okay. Okay, so now we have to input the pricing. Let's say okay. Wait, we need to change the item category setting also. This is defaulted for TS. Let me go to item category. Yeah. That is our change the client. I have to change the client first. Alright, let's go and add the price. Okay, so here we are all set as far as the sales order is concerned. So now we can save the sales order. 13826 has been saved. Let's try and deliver this sales order. Let's get a line for delivery. Alright. For client ZP03, there is a stock already posted for this material. Let's check the stock. I have posted, I was doing the settings, I was testing it. I have posted the stock. This was the condition because the material was not available in ZP01. That's why we want to deliver it through ZP03 because ZP03 has the stock. Right. No, sensor will be ours. Only the plant will be from different company code. Now for internal billing creation, the other sensor may come into picture, but for the transaction to the customer, our sensor will be in picture. Our sensor will issue the invoice to the customer. Okay, so we'll come to all these steps of the configuration one by one. First, let me show you how this scenario works out as a transaction level, on the transaction level. Okay, so now for ZMAT INC, if you look at the stock in plant ZP03, we have got 91 quantity available in unrestricted use, which you can use. Okay. This was the previous session. Now we can create the delivery for this. Alright. Alright. So once we have created the delivery, next stage is to create the invoice. So when we don't select any billing type, automatically GS2 will be selected. And here if you look at the price, this is copied from the sales order, 20 euros. Okay. So this is the same, whatever we entered in GPR1. So we can save it. And the invoice 9003795 has been created. What was the delivery number? 8001617. We need to go to VF01 one more time and now we have to select invoice of type IV. Now the previous invoice that has been created that was for the customer, and this one is for intercompany trade, like from one sales organization to the other one. Okay, on execute. See the price that has popped up is 10 euro. That is the transfer price. Let's look at the condition type from where it is taken. The condition type that is being picked is PI01, 5 euros. Let's look at the analysis. The procedure that has been picked is GPIMQ1. If you remember, in the sales order the procedure was something else, GPP001 or something like that. So this is a different procedure which has been assigned to this billing of IV type. Okay. If you look at the condition analysis, condition record has been found based on this excess, and this is the value which has been found. Okay. So now we are all set. We can save this invoice and document 9003796 has been saved. Let's look at the accounting entries. So for this company code 0005, account 100210. Now this account is the sales of GC01. Okay, that assignment we have made. And then 10 euros has been debited from this account, from GL account, where the revenue was posted when we did the normal invoice for the customers. So both the entries are in order. So let's look at the other invoice. So this is how the document flow will go. We created a specified order and then we created a delivery. Based on the delivery, we created invoice. The first invoice was for the customer, and the second invoice that doesn't show up here, so we have to go to the sales order and look at the document flow from there. Yeah, here you see the whole picture. Alex order, Alex delivery, picking request, goods issue, invoice 7955, and then intercompany billing 7956. Okay. So let's look at the configuration for the intercompany. From the navigation point of view, we'll go to sales and distribution, billing documents, and then intercompany billing. Okay. So the first configuration that we have to make is define order types for intercompany billing. Now we'll position on our sales document type to the OR1 and assign the intercompany billing type IV. So in case we want to customize another document type for invoice, we can assign the fuel here. Okay. The same setting can be made in this document configuration screen. I'll show you where. Double click on this document 0R1. Scroll down. In the billing section, by default, there have been some assignments made. For delivery list, the billing type GINV or the RF invoice has been configured, and if the billing is instead of delivery, order is the reference document. For that also GINV will be defaulted. Like when you go to VF01 screen and you enter the document number and simply press execute, this will be the document which will be selected by the system. And for intercompany billing type, IV will be selected for GOR1. Okay. And if you look at the shipping tab, GLF1 is the default delivery type for this type of orders. Okay. Let's come back to our intercompany billing settings. So we have to assign organization unit per client. We want to do the intercompany trade through GP03, and GP03 was not assigned to our sales area, so this is the assignment we are making here. GP03 will be assigned to GC01, G1 and G1. Okay. For GP01, it's already GC01, G1 and G1. Okay. Right. Now here, the next step, we have to define internal customer number by sales organization. Before you come to this step, you have to create a customer master record with the address of the sales organization, and once you have that customer number created, you come here and assign the customer number to your sales organization. Right. We have created a customer master 100210, and that customer number we have assigned to GC01 sales organization. Okay. Let me show you what do we have for this customer master. Just the basic settings. Here you need to maintain some setting in CUPP so that the pricing can be determined. Now all the other things can be optional. If you are not using any of these, that's fine. In the shipping tab, you need to maintain shipping conditions and delivering plant. Delivery priority, that's optional. You may or may not pick it. And in case you want to combine multiple orders, you can check box order combination here in the shipping tab. You must have noticed here, in case partial deliveries you want to allow for this particular customer, you can check box partial deliveries per item, and then how many maximum partial deliveries you can allow. There is a space only for a single digit, that means up to 9 deliveries can be allowed. Now account assignment group 01. You remember yesterday when we configured the account determination, we used in this group. Okay. There were two groups, one was coming from the material masters and the other from the customer masters. Both had the same name, account assignment group, And this is the setting in document section for the customer master. Okay. So this is input terms and terms of payment. On the sales document, these values are defaulted from the customer master. So in case you leave them blank, nothing will be defaulted and you will have to input it manually. And this is the text configuration. In our current setting, we have marked it exempt from text. Okay, but in case it is relevant for text, then we'll have to define some values. We'll have to do the configuration for text. And that will be done through condition technique. In that case, we can choose liable for text or half text, whichever is the valid option. And these are the partner functions for this sold to party. Okay. So once you create this customer master, we can assign this customer number to the sales organization. Okay, go back. Okay. Okay. Right. 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 So let me show you the enterprise structure. And okay. Look for and so let's say this is 02. You see this first assignment here starts for normal transactions GC02 and Z1 has been assigned GC03. Okay, the settings that we were seeing before this screen, they were only for intercompany trade. Okay, that setting does not affect the normal transactions of this client. Right. This is organization. Okay. Yeah, I mean, there are two scenarios. One is, if the GC03 and GC04 are in the same company code, then the assignment will be made here, right? GC01 belongs to company code 1000 and GC02 belongs to company code 0005. In a third company code. Okay. Okay, I get it. I doubt whether you can have multiple entries for any plant here. Let me try and create one. We cannot copy. See, plant is coming only once. You don't have the option to create any new entries. You are in chain mode. Right. Which means that there is a unique key for the plant. Only one assignment can be made at a time. So even if there are multiple company codes, one plant can be assigned to only one configuration for intercompany purposes at the same time. Okay, so this is a unique key. The first column is a unique key. You cannot have duplicate entries here. Okay. Alright, so this is all the settings that you need to do for the intercompany trade. Right. Any questions, Vinanta? Okay, let's fine. Alright. But when you practice, you will have number of scenarios, So just take it one by one, and then you will be able to solve. You will be able to arrive at the end. The end is to create IV type of document and trigger the intercompany pricing. Normally it takes 2 to 3 hours to configure if you start from scratch. So if you get bugged, don't bother. 2 to 3 hours is the normal time which you will take to configure this scenario. Alright, let's start with consignments. So what is a consignment? Anyone? Customers keep stock. Can you expand upon? Give it a shot, guys. Can you see my screen now? So on the website, there is a link where you can find all the information about the consignment. I will share this link to the WebEx. I am sharing this link so that you can open this link here. Consignment process. We have some customers who want to keep the stock in their keep the material in their stock. They don't want to wait for us to deliver the items because some items are very critical for them and they want to avoid the delivery time. But they don't want to pay unnecessarily for all the items that we are keeping in their inventory. So this is a scenario which is built keeping in view that particular requirement. So the first step will be we will identify some customers who will keep this stock. The first step is we create a consignment fill of order of type KB. Right? KB is a standard order type. You can configure and give it a different name like ZKB or YKB. So what this says is we have issued the material against this order and the material is lying in the customer stock, but ownership still lies with us. That is kept in the customer inventory in some storage location, but the customer has still not paid for it and we are still the owner of this material. Now as the customer wants some material, they will come to the location and they will consume some materials out of it. Okay. The second process, when they consume the material from the stock, that is called consignment issue. The first one was consignment fill of KB. The second is consignment issue or KE. Now KE is the document that triggers pricing, that triggers the invoice. Okay. There are item categories which are designed to take care of the pricing and the delivery and the ownership of the stock. For KB, the default item category is KBM. For KE, it is KEM. So when you do the PGI, this will reduce the consignment stock. Now here you can create the invoice and the customer has to pay for the materials which have been issued. These two orders are for the forward flow, or when the items are flowing from you to the customers. And for both of these processes, there is a reverse entry. Like for consignment issue, there is a return, and for consignment fill up, there is a pickup. Right? The stock which is lying in the customer location, and they find this material is faulty. They have not paid for it, but still they can say, okay, but our material is lying in our stock. 50% of the material is faulty. So we would like you to take this stuff off from our location and replenish with the new stock. That is the pickup process. So fill up and pick up are opposites, and issue and return, they are opposites. Okay. Questions? Okay. So this consignment stock, now we need to differentiate between consignment stock and the normal stock. When we go to MMBE shows us the stock in our plant, in our storage location, and then there is a special indicator called special stock. Consignment is considered as a special stock, which cannot be used by the other processes or by other transactions. So when you look at MMBE, this will appear in special stock or consignment stock. And when we do the delivery against each of these orders, we will see how this consignment stock reduces or adds up. We're going to create the first step. The first step is the consignment fill up. So we're looking for an order of type KB, and the customized version is the KB1. Alright, I'll create it for this customer. Hello?
Hello.
Who is this?
Can I speak to Anju?
I guess she has already slept.
Hello.
Hello?
Can I speak to Anju?
I think she is sleeping.
Hello.
Give me a second. Yeah, so let's pick order quantity of 100. Let's just look at the stock situation before we create. Let's pick Zoom 13 and we want to choose the position in BG01. Here, this is the special stock checkbox that we have selected. Okay. Now let's look at the stock. So for this material, there is a consignment stock 15, which is available as of now, and in the unrestricted use we see 9980. Okay, so we'll add this stock and we do a post-put issue against this order. We'll see how this stock reduces or increases. Now all the entries I guess we have made. Yes. So this is a filler. There are, see, the stock available is 9,980. Now, first you create like a helmet stock, right? You are sending something to the customer location. Okay. So before that, I want to show you how the pricing works out. Okay. So whatever happens, just keep it in mind. When I input GPR1, input some price, see, just keep in view the message that we are getting here. Requirements are not fulfilled one, condition GPR1. Okay, that is nothing else, that is expected behavior. Okay. Right. And the system has a check to enable that. Alright, let's go and deliver. So the location, the quantity is 100. And let's do the post position. Right. So the goods have been posted. Let's see how the stock has behaved. Now see the stock customer consignment has increased by 100. Now it is 115. So we will go and create another order of issue, not type issue. Or let's first try a pickup against the fill up. So for pickup, the default is JA and what we have configured is JA1. How much you want to return? Yeah. The intimation, I mean, that can be configured as email or something. The customer has got the stock in his location. Now they have got the truck, right? They have received all the goods, and they are doing the quality inspection, right? During the quality inspection, they will find. During the quality inspection, they find that all the 100 are not suitable or they are not fit. There is some damage. So they will say, okay, out of 100, I am keeping 50 and you can pick up the remaining 50. Okay. So this is, let's try to enter the pricing here as well. So what do we expect here? The same kind of message. Right? So we didn't charge the customer when we sent the material. Now when we are getting it back, there should not be any pricing involved as well. Okay. So let's try to deliver this material using save. Okay. So we should be good to go for PTR. Delivery has been saved. Let's see how the stock has played out. Now we are expecting 115 minus 50, right? Yeah, 65 in the customer consignment, and then 9930, and then 50 has been added to the unrestricted use. Okay? Right. They have returned. There are two processes. One is when they return after they have bought it. First is when they return before buying it. Okay, so this is what they have returned before buying. Okay. No. Yeah, just based on the quality inspection, because whenever the stocks arrive at their location, they will do the quality inspection, regardless of the fact it has been bought or not. Right? So before doing the GR or goods receipt in their location, they have done the quality inspection, they have found some stock has been damaged. So they return 50. But at this stage, no pricing has been triggered, neither at the time of sending nor at the time of receiving back. Okay, now we'll see, they have received 50 items of this material and they would like to consume 10 out of these 50. So we create an order of type ZKE1. ZKE1 is the consignment issue stock. For the consignment issue, we are supposed to enter order reason that has been configured as the incompletion log for this. Alright, and let's say they want to issue 10 at this stage. Alright, and now let's try to enter the pricing. What do you expect? You know, as you say, Raj, you are the man. So now we are good to go for the sales order. Let's deliver it. Monthly need to it has been saved. Storage location is L1 and let's do the post position. So now 10 has been issued to the customer. What do we expect to see in this stock stream? So we had 65, now it is 55. Right. It didn't impact 9930 or the unrestricted use stock. Now out of 10, we expect something to come back from this customer. Like they have paid for it, but even after paying, they find there is some damage and they want to return the item. So the order type is KR in the standard system and we are creating a ZKR1. Let's say they want to return 5. See here, billing block has been defaulted for this order type. Check credit memo because this is a return and we want some approved person to have a look at the order and then release the block. So we will not be able to create the credit memo against this return unless somebody approves it. Okay. But it will not stop us from creating delivery. But here we can enter the pricing. Okay. Alright. Now let's deliver. Yes, it is, but for this combination, I have not created any condition records. That's why it is not, automatic. There is a catch here. Now, it depends on the configuration. By default, the system will look at the current condition record for that combination. But if you want to refer the pricing that they have paid or refer to the same sales order against which they have got the stock, then we have to mention it in the copy control routine somewhere. So the standard setting will pick the data from the condition records. Let's do the postcode receipt. Returns delivery has been saved. So let me ask Silanta. Silanta, what do you expect in the stock overview? How much should the customer consignment be now? Yes. Consignment should return or return should increase. Okay, Okay, I got your answer. Upinder, what do you say? Upinder, are you there? Let me see. She's not there. Looks like she's silent or something. Yeah. No, I guess she's in the meeting, but she's not on site. So she cannot hear us. So she can only see the screen. So Raj, give us the right answer. After the return, what will happen? Yes. And how will this consignment play out? Will also should reduce? Let's see. Yes. Right. So now once I return, it will go back to the fill-up stock or the consignment stock. Right? The ownership changes, but the stock still lies in their location. Right? They have returned the material, but it has not come back to our place. It is still lying at their own location. And it is gone back to the first order that we created. I mean, the stock lies there, but it has not been paid by the customers. Now they have returned the stock and they have got the money back, but the stock still lies there. Okay? So the consignment stock again increases to 60. Now this has to be picked by a pickup order. Then the stock will reduce. Yes, the pickup order has to be created to remove the stock from the customer location. Okay, so there are 4 orders: pickup, or to start with, fill up, issue, and then return and pickup. Okay, so when the customer returns, it will go back to the consignment stock, and when you pick up, it will reduce the consignment stock. Raj, today no lunch break. I'm giving you some time to go through both the scenarios, and we'll get together in 30 minutes. Mm-hmm. Mm-hmm. Yeah, straight away I can do that for you. The transaction is MB1C to post the stock. Okay. Here MB1C. Let me bring that to you. Yeah, MB1C. Here you see the movement type 561, that is to post the initial stock. Okay, and then plant storage location we can mention where you want to put the stock. In case it is a special stock, you can mention it here. Okay, but otherwise we are good to go for this team. Now here you can enter the material in the stock and just save it. The stock will be posted. I'll post something for our GMAT team. Just for options. I'll post 100. Right. And then save. That's it. Yes, let's look at the MMB for GMAT 13. Okay. Yeah, anything? 10,030, so 9,300 before. Right, right. Yeah, for that I have to see, I have to check the configuration first from the purchasing side. I've not done that in the system. The normal steps you know already, right? You do a purchase rec and then purchase order, then you do a MIGO. Yeah, I mean PR is also optional. You can directly create a PO and then do a MIGO against that PO. Item check. Check. I don't even remember. Okay, here you mean the movement price here will be 101. 101. Whenever you do a receipt against the PO, see this is 101. Yeah. Okay. And then you just enter the purchase order number and you should be good to go. Right. Alright guys, then see you in 30 minutes from now.